Good morning, everybody. Shane here from the Brookings Home Team, powered by Century 21. We're getting back in the saddle again after this Thanksgiving weekend. I hope everybody watching here had a great Thanksgiving and you got full of plenty of turkey and ham or whatever else you decided to have. But Justin here has graciously said he would jump in here after our busy Thanksgiving weekend. Thanks for doing that.
Yeah, no problem.
And it's 8:15. We're going to do a Monday morning mortgage tip. But before we do that, guys, remember as you jump on here, give us a heart, give us a thumbs up, let us know you're coming on, and as always, if you have any questions for myself or Justin, his information will be on the top, on the bottom, or on the sides, wherever your device allows you to see that. So with all that stuff out of the way, what is the tip for today, Justin?
Perfect. Thanks for having me today, Shane. Today I wanted to talk about a somewhat unique loan program that's out there that doesn't really get talked about a whole lot, simply because there's not many places out there that offer it, and that's the conventional home style renovation loan. And actually, to my knowledge, I'm the only lender here in town that actually offers this program. There may be some other ones, I'm just not aware of it. But what it is it's kind of like a home improvement renovation type style loan where easiest way I can explain is to give an example. So let's say there's a house that's listed for sale for $150,000, but in order for you to get that particular property to your liking, you need to stick, maybe an extra 50 grand into it. Maybe you want to build a detached garage, you want to do a kitchen makeover, redo a bathroom. Really the options are endless. So let's say the house is listed for $150, you want to put another 50 in. How that works is you write up that offer to pay the sellers the $150, but then before we get that appraisal ordered in the process, we have you go and visit with the contractor, get all of the bids, plans, blueprints, estimates, all that stuff put together. Once we have that finalized, then we take that and we provide that paperwork to the appraiser. Then we ask the appraiser to go out to the property and provide a value that is subject to that work being completed. So the value that they're going to give us would be as if that work was already completely finished and done. And so that's a way to structure a deal to allow you to make some improvements right out of the gate if you don't have that extra money sitting in the bank to utilize for that. It is a little bit more lengthy of a product. It can't close quite as quickly as your normal purchase. There's a few other hoops to jump through. One thing that throws quite a few people off is if you're the do-it-yourself type of guy. That unfortunately is not going to be an option because you do have to have a licensed contractor complete that work. And so how that works is then if everything comes to fruition, one of the other risks that you sometimes run with anything that has to do with construction is you don't always get a dollar for dollar rate of return on your work. And so just because you're putting 50 grand into this property does not mean it's necessarily going to increase that property by $50,000. And so that's one risk that you run. I mean, it does happen where it's a dollar for dollar increase in the right scenario. But if everything comes to fruition like that, once the loan closes, the seller is paid their $150,000, and then the builder completes that work after closing, and then the builder is paid that extra $50,000 after that work is complete. Okay. And so it's a little bit more lengthy of a program, a little more hoops to jump through, a few more hoops to jump through, but it can be for the right property and the right client out there. It can be a very, very good program.
Yeah, no, it's not the cut and dry typical traditional conventional loan there. There are some T's to be crossed and I's to be dotted in there. But,
and one last thing I'll throw in there too, Shane, is that there is actually another program that's called a FHA 203K loan, which is very similar, but it's even less fun to to jump through those hoops because then you're working with the government regulations and there's even more hoops to jump through. So, but yeah, there are a couple different options out there that don't get talked about very often. You bet.
And maybe that'll be next on a more broader podcast that we can do later on.
Definitely.
But, so great tip, great information for this post-Thanksgiving weekend. We are into December, guys. 2019 is almost done. I want to thank Justin and all my lender friends for doing this. We're going to continue on doing it. I appreciate everybody watching. So if you have questions for us, we're always looking for questions. We want to hear from you. Let us know. Drop a comment or drop that question in the comments below or wherever. Reach out to us and let us know. We want to see what you guys have questions for as well. But thanks again for watching. We'll be back next Monday morning mortgage tip. Have a great week and stay warm, guys. We'll see you later.
Thank you.